Hello folks, this is John Graziano from FFP Wealth Management with an educational economic update for January 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in December. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. So how do we close out 2018? To put it bluntly, December was a challenging, volatile month for stocks as equities also ricocheted between losses and gains. Want an illustration of how dramatic the turbulence was? Well, consider the Dow's performance for the days surrounding Christmas. First, the Dow experienced its worst Christmas Eve in history. Then the very next trading day, the index posted its largest points gain ever. That experience was pretty much December 2018 in a nutshell. In fact, despite positive returns for the year's final trading day, the Dow and the S&P had their worst December results since 1931. All three major domestic indexes also had their worst annual returns in a decade. In 2018, the S&P lost 6.2%, the Dow declined 5.6%, NASDAQ gave back 3.9%. Just a few months ago, the indexes were reaching record highs. So why the about face? Many investors sold off stocks in reaction to worries about economic growth, the Federal Reserve's policies, and ongoing trade tension. However, that answer could oversimplify the situation. Some people blamed computer-generated trading for the intense fluctuations. Others said that they were in a period of hypersensitivity to the headlines. Of course, investors have many headlines to digest, including the government shutdown that was on its 10th day by New Year's Eve. And we all know that that's continuing today. But we want to take a moment to look beyond the biggest headlines and see what data told us in the month of December. In the latest readings, we learned that personal income was up 4.2% over the same time in 2017. Manufacturing and service sectors both beat expectations. The economy grew by 3.4% annualized return in the third quarter. That reading was slightly lower than initial projections, but at the same time, only one quarter had faster growth in the past 4 years, and that was the second quarter of 2018. In other words, several data points were showing that beneath the market gyrations, the economy is still strong. Federal Reserve Chairman Powell echoed these sentiments when announcing interest rate increases again in December. More concerns might be there, and the markets might not like the interest rate increases, but by the Fed's assessment, our current circumstances indicate a very healthy economy. In the year ahead, we will continue to monitor the markets, real risks, and opportunities. One thing that won't sway us, however, are the headlines. That's it for the month's Educational Economic Update. Once again, this is John Graziano with FFP Wealth Management, giving you your economic update for the month of January 2019. Please remember that nothing we talk about is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 201-823-1030. We'd be happy to speak with you. Thank you.
The following is the required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended for investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. FFP Wealth Management is a branch office of TFS Securities Inc., a full-service broker-dealer located at 437 Union Springs Road, Lincroft, New Jersey, 07738. Investment advisory services are offered through TFS Advisory Services, a division of TFS Securities Inc. This video is the property of FFP Wealth Management and should not be downloaded, shared, or otherwise disseminated without the express written permission of FFP Wealth Management. Thank you, and have a super fantastic day.